Indonesia, 21 million crypto users, and a lot of them are actually teens, actually very young people. What would you tell them in terms of how to make money in this space?
Yeah, wow, it's interesting because crypto has this tendency to change people's lives in very big ways. And, over the 6 years that I've worked building Nansen, I've met a lot of young people who've made a lot of money very quickly.
Wow.
And so I think one thing is to definitely make sure that you make sure that you don't gamble it all away, right?
Okay, right.
So that's very important. You need to start thinking a bit about portfolio management. But at the same time, I think young people are also the ones who can risk a little bit more, take more risk, because if they do lose a lot of money, they still have many years to make it back.
Right.
So I think the most important thing when you're young is that you're learning, right? And so develop some skills around how to manage portfolio, how to do research, how to think through, what the best investments are going to be, and then make sure that you're investing in yourself, learning, developing your skills, etc.
Right. Nansen has a lot of tools to actually help you separate the signal from the noise, right? And I'm curious on how would you sort of explain to a lot of the people who are new to this space, how to use Nansen for these purposes.
It's funny because sometimes people think of Nansen as a Bloomberg terminal for on-chain, right? But maybe that analogy is more appropriate for an older audience. You know what the Bloomberg terminal is. If you're 21 years old, you might not know that, right? So I think of it as a tool that gives you X-ray vision on the blockchain.
Okay.
So it means that you can discover new tokens, you can perform due diligence, which means you can decide do you want to buy them or not, and then you can track your portfolio. And the goal overall is to grow your investment portfolio, right? And we're 100% focused on on-chain. We think that's where the future of finance is going to be built. And so we are the best product to find out what's actually happening on-chain.
So the focus is on-chain, but there's a lot of stuff happening off-chain as well. Obviously, I think Indonesia has more than 10 actual legal crypto exchanges, and there's another 10 queuing up. What do you say to those people who say that that means you don't have the full story?
Yeah, no, you definitely need products that are also off-chain, especially when you have to get fiat, for example, into the system. There's no way to do that directly to a blockchain, right? So I think you need these types of products that are at the edges, that bridge kind of the real world and the on-chain world. But my view is that the future is going to be built on-chain. And increasingly, assets are going to move on-chain, whether it's real estate, whether it's bonds, stocks, public equity, private equity. I think it's all going to come on-chain. And what that means is that most of these products can effectively build more natively on a blockchain. But right now, we are at this stage where most assets are still off-chain, right? But I think that's going to change, just like most businesses have come online after the internet, right? And so if you run a media company and you're not online, you're basically not in business anymore, right? Yeah. So I think it's the same with on-chain.
So do you think that drive will be coming exactly the way it did for people who are, crypto OGs from 5 years ago, 7 years ago, 10 years ago? Back then, a lot of us are actually going into Bitcoin and Ethereum and all that for self-sovereign, self-sovereignty, right?
Yes.
So is that still the same drive, or is it more of a profit motive these days?
That's a great question. I do think it is a little bit different now, right? Many of us joined crypto maybe even for idealistic reasons, permissionless innovation, decentralization, etc. I do get a sense that there's a little bit more focus on kind of fast profits, and on the one hand, maybe that's not great. On the other hand, I think if crypto has to rely on ideology to win, I don't think it's going to win. I think you just have to give people better products and better infrastructure, which means you need to have faster transactions, you need to have an easier user experience. And that's ultimately how we can make the future of finance become a reality, by building those products. So in a way, I kind of like that you have to just win users over on the merits of, does the product and the tech actually work? Not ideology of decentralization, permissionless innovation, which you and I are excited about. But I think most people care more about, does this thing actually do what I want it to do, and does it do it fast?
in the last cycle, a lot of people were talking about, like most people were talking about utility tokens actually having sort of like good incentive modeling to sort of like model the conditions of a platform to help people basically perform that, like basically bring in value into the chain and actually profit from the chain while helping the chain have that utility. A lot of those have failed, right, Alex? Like not all of those have succeeded. Like, can you comment on that?
Yeah, I think it's still very early, right? Ethereum is like 10 years old.
Yeah.
And so maybe it's too early to say that they've failed, right?
Okay.
It depends. It depends a bit how you look at it. One thing that's been surprising to me is that clearly DeFi protocols, some DeFi protocols, and for those who are not familiar, basically think of this as if you have, smart contracts that perform basic financial functions, right? So think of it as like lending, borrowing through a pool. You can do that on the blockchain, decentralized, smart contract driven. These products have product market fit. There's billions of dollars, tens of billions of dollars in many of these products, but the governance tokens associated with them have not necessarily performed that well. Right? And like the one example that comes to mind is Lido, which is staked Ether, hugely successful, but the governance token has not done very well. To some of us who are token holders, are suffering for that, but
yeah, not commenting on that one. Okay, but there, it might be like as a hypothesis, could it be that we're just thinking a bit too simplistic, like in terms of like the profit motive is related to profit directly, but like a lot of these complicated ways of actually staking and unstaking and actually getting governance tokens, like, oh, you get this governance token to actually decide what happens to who wants that. Like, is that something that causes?
Yeah, I think the reality is that the regulatory environment has kind of led to the creation of a bunch of assets that maybe don't make that much sense, right? Like, I think what you want at the end of the day, if you kind of set all regulations aside, is as an investor, you want to own part of the upside of a project. That's like why you invest.
Right.
But you have securities regulations,
of course,
which complicate things.
Right.
And so you can't just say, hey, I'm going to build a project, you get to invest, you get to take part in the upside, because then you start
becoming a security
potentially. And so I think that's kind of led us to create these workaround assets and workaround tokens, which I think is not necessarily a good thing, right? Because they're really workarounds to some extent. So what I'm really bullish on actually is to find ways to bring all assets on chain, right? It shouldn't just be these synthetic assets that are kind of totally crypto native. We should have those too, but we should get, securities, real estate, stocks, bonds, you name it, on chain. And I think that's really when the crypto space is going to explode even more than it's ever done.
From let's talk about multi-chain stuff. Like obviously Nansen has this as well, but like the question would be like there's so many chains coming out, and it's sort of like extracting a lot of liquidity from the market as well. And some people are saying that this is not something that is tenable in the long run. What do you think?
Yeah, I don't think the solution to our problem is one more layer one necessarily.
Okay. Right.
However, I also don't think that it's clear that we are done innovating on layer ones, right? So I think you can keep those two thoughts in your head at the same time. And so my view is we should just let chains battle it out to create the best possible infrastructure. And at the end of the day, that's what's best for consumers. But, we should focus on actual applications, a great user experience. It can't only be infrastructure. Like the infrastructure is pretty good. I don't think that's what's holding us back at this point. It's more about having really great products and really great user experiences.
More users on chain, basically.
More users on chain, essentially, yeah.
So, there was a trend of app chains a few years ago. Like, I think it's back.
Even Hyperliquid, you could argue, is an app chain.
It's an app chain. So, will that be sort of like the go forward? Is that a narrative going forward, do you think?
Yeah. I was chatting with someone about this yesterday because there's a bit of an analogy with with the conferences, right? We're at CoinFest right now,
right?
And there's kind of a main conference, which maybe is like a blockchain. And then if the brands get too popular, they can just spin out their own side events, and they don't even have to have a booth at the main event. And maybe that's what's happening with apps and blockchains too.
Maybe.
You know, if you're pumped.fun, you have so much traction. Why not just own the full stack, capture all of the value? So I think it's ultimately about distribution, right? You need to have, if you have great distribution, maybe you can branch out and just run your own chain. But I think some apps will also find that it's premature. And, you know, it's harder to run a blockchain than what you might have thought.
Right. If that becomes the pipeline, then it starts with an app, and then it becomes an app chain, and then you get users on that blockchain.
Yeah.
And,
I think the fear I would have if I were a blockchain founder is, what if every really successful app just leaves?
Yes.
So you only get the mediocre apps, you know? But maybe then you're like a launch pad almost, which is not necessarily a bad thing. But then you're, I don't know, you can use a lot of different analogies. Maybe it's like a shopping mall, right? You have a bunch of brands in there, but eventually they get their own flagship store and they open up across the road, right? So it's kind of hard to predict how it's going to play out, because blockchains, you can sort of think of them in many different ways. But at the end of the day, I think a lot of it has to do with distribution, right? And composability. Like, can I connect this app to other apps? Can I borrow money from Aave and then, you know, take that money and do something else with it on the same chain? It's much harder to do that if everything lives on separate chains.
That's actually a good point. Like the idea behind, like, I'm curious about like how this actually relates to like the philosophy of having a thin relay chain instead of like a thick one, like the way, like, you know, the Polkadot guys are saying it.
Yeah, that's interesting. I'm not sure. I think my view increasingly has actually become that I think a lot of the value is going to accrue to the interface. The interface. So the product that owns the end user is going to capture most of the value, I think, which is the inverse of like the so-called fat protocols thesis, which is that the value accrues at the blockchain layer. I think maybe it's both, but I think there's a lot in between that gets commoditized.
This goes directly against the way Ethereum is philosophizing this, isn't it?
Yeah, so maybe that explains why ETH hasn't performed that well, although it has performed pretty well in the last few months. So.
Yeah. Back to almost, let's talk about AI.
Yeah.
Like, you're obviously doing a lot of data, and there's a lot of convergence between like crypto and AI. A lot of these are thin convergences, not really just narrative convergences. What do you see going forward, though?
Yeah, I like to say I was an AI before it was cool. My master's is in AI from 15 years ago.
I made an expert systems paper in 2008. Oh, wow. Guys, you can edit this out. But like 2008 expert systems paper. So I was AI.
Oh, cool. Yeah, that's great.
Before it was cool.
Yeah.
I'm going to use that.
Yeah. Yeah, you should. Yeah, so...
Okay.
So I think essentially that, you know, every part of the software industry has to be completely rethought with AI. And I don't think crypto is an exception. And so I think about it mostly in the sense that with our product, Nansen, that's a user-facing product, right? So we are not like infrastructure. We basically own the end-user relationship. But the way people have been using Nansen so far is through clicks and dashboards, etc. That's not how they're going to invest on chain in 2030 or even maybe next year. I think it's going to be agentic. And so people are going to work through AI agents to invest. And so we have some very exciting product launch coming soon. And what I think is that this product launch is going to be the start of a new way to invest.
Interesting.
And so I really think that we're going to look back at this era and think, wow, that was really old-fashioned. Like, you know, that was so old school, how we did it manually. We had to click, we had to set the price ourselves, we had to calculate what is a 2x, a 3x. You know, we had to do hours of research. I think the future looks more like an AI agent compresses the research into seconds. And then eventually, when you feel comfortable to make an action, you do it directly in the same interface. And so you can execute the transaction on chain, right? With self-custody. immediately, and you have the whole flow going through an AI agent. So if we kind of take a step back and think about the AI space, I think AI products so far have mostly been successful as general purpose AI products, ChatGPT, Grok, Claude, etc. But there's going to be, like, the next phase is going to be vertical AI products.
Small language models instead of large language models, probably.
Well, I think of it more as use case specific AI products. Okay. So like Cursor is a good example. Cursor is basically for engineering, right? And coding. And that means the whole user experience is designed around coding. So it looks a little bit like ChatGPT. It has a chat, but it also has the code editor. It has the file structure, it has a terminal, right? It has all of that. And so what does that look like for investing? Presumably you'd want to have your portfolio. Right. You'd want to have maybe a place where you can interact with tables, charts, etc. Right. But you're definitely going to want to have the chat interface where you can talk to an AI agent. So
I wonder about the sovereignty of that, though. It's in terms of the AI sovereignty.
Totally.
I mean, you can't really self-host it. Well, you can self-host the AI, but that wouldn't be a very good business model.
It's an excellent question. Yeah. I think there's a few different angles there. Like, one is the self-sovereignty in the sense of the model, can you run it locally, etc. Yeah. But at the end of the day, I think, you also need a way to give the LLM eyes on chain. Yeah. So the question is, how do you get that? And of course, that's where we play a role. That's what we do. We index all the data, we label 500 million addresses, and we make it really easy for users, right? So, but at the same time, we're a centralized entity, right? And so you're using a product, you're trusting Nansen.
Yeah.
And there's also a chance that maybe AI agents are more prone to manipulation, right? Exactly. So maybe that's going to open up a whole new attack surface for manipulation of trading and investing, right? Yeah. So yeah, it's pretty interesting and exciting, but I think ultimately, we've kind of opened Pandora's box, and we just have to embrace AI. Right. And this is how I think, the future of investing looks like. So we're basically just diving straight into it.
Computing's been increasingly, of course, cheaper and cheaper. Moore's law, I don't know if that still applies particularly, but it's been inference speeds have been speeding up. Elon Musk recently said that all of these are going to be phones. Going to be inference endpoints, right?
Yeah.
So, in that era, do you still see I don't know, what would you do? Let's go crazy. What do you think Nansen would do? In the future, I won't hold you to it. We won't hold you to it. But I don't know, a Nansen phone, for example, or something like an appliance or.
Yeah, it's a cool question. I literally just bought the Solana phone myself.
Did? Okay.
So I'm waiting for that to arrive. But I'm pretty excited about the idea of having more full stack sovereignty and permissionless innovation, not getting blocked by the App Store, and having actual wallets, transactions.
How do you monetize that, though?
I think probably transactions.
Okay.
So if you just make the user experience great and people complete the transaction through your UI, you can always have a small cut of that, which is something that users are surprisingly willing to do. Yeah. You see some of the meme coin trading products, they literally take 100 bibs, 85 bibs, which is a lot. If you go on a centralized exchange like Binance, you pay 10 bibs, right? You pay literally 90% less. Yeah. But somehow they're willing to just let these platforms take a lot of fees.
It's why people subscribe instead of buy, and then spend more subscribing.
Yeah, but so I think there's definitely room for new investment interfaces, new trading interfaces where you have everything in one place, research, etc., and you can also execute your transactions there. Interesting.
We'll get back to that. I want to talk about hype cycles in crypto, NFTs, DeFi.
They all follow the same pattern, by the way.
It's about pretty similar.
Which is, can you
expand on that?
Yeah. So it's basically someone makes an innovation. That's one, right? Yeah. And you can do that. You can apply this model for everything, even digital asset treasuries, MicroStrategy. That's the innovation there. Right. If you look at NFTs, arguably it's CryptoPunks. You could say it's CryptoKitties. I think CryptoPunks for profile pics were the innovation. For smart contract platforms, it was Ethereum. For layer 2s, I don't know, what was the first one, Optimism or something. Right? So stage one is the innovation, which is one. There's always one innovation. Step two is the cloning. And so the cloning, it's not really cloning, it's more like copies that are slightly different. And all of the examples I gave have seen that, right? Manual copies. Take Ethereum, all the layer 1 smart contracts, they're like variations of Ethereum, right? Take, pudgy penguins or bored apes or hash masks, they're all variations of CryptoPunks. So stage 2 is cloning, but it's manual cloning. The step 3, which I call industrialized oversupply, is when you have a factory to clone, right? So pump.fun is that for meme coins, right? You had Doge, the first meme coin. Then you have a bunch of manually created meme coins, Pepe, etc. And then you now have a factory to create essentially oversupply. And it's at the oversupply stage that things start to go down. Because you have oversupply. And there's just not enough capital to catch up with all the new issuance. So you could argue, like, this is the same thing with, layer 2s and even layer 1s. You have now frameworks to create layer 1s and layer 2s really quickly. You can go to like ZK Stack, OP Stack. You have, Alt Layer, and there's a bunch of other platforms that allow you to create chains. So it always follows that path, like innovation of one, maybe tens, hundreds, possibly 1,000 manual copies, and then a factory that creates industrialized oversupply.
Are the hype cycles sustainable at all, do you think?
Well, I think the thing that always happens is that if the innovation is useful and sustainable in some way, then some of these survive, but most of them die. And that's ICOs, by the way, follow the exact same path, ICOs, right? So literally every narrative in crypto follows this path. And the truth is, though, if you go back to the ICOs, some of the most iconic crypto companies were created through ICOs. Binance had an ICO, right? One of the most, profitable investments anyone could have made was to buy into the Binance ICO. So it's not all bad. It just means that like 99.99% goes to zero, but then the 0.001% changes the world.
A lot of people are asking about again, we were talking about governance coins earlier, right? And a lot of people are buying into projects that are promising that control over and it never goes basically anywhere. And the other question that I have in mind is how does governance look like in this future, in the current future, being that we have AI agents interacting on chain, for example, and tending to be human. Do we all have to serve the orb?
It's pretty obvious that most humans don't enjoy participating in governance. There's a lot of governance apathy. If you pick any DAO, the voting rates are appalling. No one cares, or no one wants to spend time on it. So I think governance is should be seen as a necessary evil that is only used when you really need to do it. So I think there was a time, and again, this follows the pattern I said before of DAOs. We had one DAO and then a couple of DAOs, and then you have Aragon, a DAO factory, and many other DAO factories.
Same pattern.
Right. Exactly. And so I think that basically created this idea that everything has to be a DAO, or every decision has to go through a DAO, which is a bad governance structure, because I think most of successful human execution is done by very small teams and with quite centralized leadership, which is a bit ironic given we talk about decentralization in crypto. So I think it's a mistake to push out, decisions to a decentralized community unless it really has to be done like that. And so to me, that's kind of the irony of crypto in some ways. And there's another irony here with layer 1s. If you think about it, every successful layer 1 has an iconic founder, which is kind of a centralized thing, right? You have a decentralized platform, but you need a centralized.
You need an idol.
You need it's almost like a monarch. You need a king or a queen of a chain. And so, this is a weird thing where you kind of think that everything has to be decentralized because that's what we celebrate. But in reality, I think a lot of great execution has to be done in a centralized manner.
Going back to my earlier question about what we mentioned the possibilities AI integrations with Nansen, even other things as well. I'm curious about in general, where do you see Nansen the future of Nansen, and especially in my market in Indonesia. Like, what's the potential? What do you think you are going to do in the next few years?
So if you think about Tesla, the first model of Tesla was the Roadster. Sure. It was only accessible to, frankly, rich enthusiasts. I think what they're doing at Nansen is now we're trying to create the Model 3, which is much more accessible to users. By the way, Model 3 is still like pretty expensive for a lot of people. So we're going even, we're trying to make it even more accessible to most people. And at the same time, you can leverage the technology and the design and the product.
You're making the Model
know-how.
T.
So we're maybe the Model T is a better analogy, or the robo-taxi maybe. But the point is that Nansen has been somewhat inaccessible to a lot of people for pricing reasons, and also because it's a pretty complex product.
Right.
And so I think the future of Nansen looks more like accessible to way more people, number one. And number two, a lot simpler and more organic because of AI. Okay. Because you're going to be able to talk to Nansen instead of having to figure out which dashboard to click at and all this stuff.
So cheaper, better, and easier?
That's probably a good way to summarize it, yeah.
How many users do you have in Indonesia?
I don't know top of my head, but I think Indonesia is one of our top 5 markets of free users. Yeah, we have a freemium model where you can use the product a lot. And then if you want to have access to the most powerful features, you subscribe.
Sure.
And so a lot of people track their portfolio, for example, with Nansen, which you can do for free. Sure. And you can plug in any chain you care about, Ethereum, Bitcoin, Sui, Solana, Aptos, you name it. Okay. And you can track all of it in one place.
Okay. So the like, how many people actually are on the paid subscription in Indonesia? Is Indonesia even in the top 5?
I don't think Indonesia is in the top 5 on paid. Okay. Maybe one day. But maybe. Yeah, let's see.
Right. So, all right. So, do you have anything else that you want to talk about, like about Nansen, or any updates you have?
I think one thing that's really exciting is that we launched Nansen Points, which is a loyalty program for our users. And so I would encourage everyone to sign up to Nansen. You can get points from doing onboarding tasks, but you also earn points from staking with Nansen. We have $2.4 billion staked with our validators, because we run validators for the top layer ones.
The layer ones, yeah.
And of course, by subscribing to Nansen, you also get points. And yesterday, I saw that there was another project called DeFi App, which essentially airdropped $4 million worth of DeFi App's home token to Nansen points holders. Yeah. So this just shows that I think a lot of projects recognize the Nansen users are very valuable on-chain users. They want them in their community, so they might want to give them things. Yeah. And so I think it's a great idea to sign up to Nansen and start stacking points.
Thank you so much. Alex, thank you for the conversation. It's been awesome. Enjoy Bali and enjoy the rest of CoinFest.
Thank you so much.
All right. Thank you.